After a strong first quarter, gold is currently giving up those gains. Still, our next guest asserts that this is merely noise ahead of a potentially groundbreaking move. And if anyone has a front row seat to the bullion market, it's Ken Lewis. Serving as CEO of precious metals exchange APMEX, Mr. Lewis has more than 2 decades of leadership experience across the technology and retail sectors. And with gold hitting a lull in the markets, now is a perfect time to consider your entry point. Recently, President Trump announced that he wanted the Federal Reserve to cut benchmark interest rates by 1% and encouraged more quantitative easing. To counter this incoming monetary storm, we've put together a pathway to profitability, which you can find at crushthestreet.com/goldbook. Listen, the president is essentially giving the Fed a green light to QE the snot out of the economy. Please go to crushthestreet.com/goldbook to protect your family. So with that, it's my honor to introduce to you Ken Lewis.
And welcome into crushthestreet.com. I got a brand new guest on the line, and this is going to be a very special treat for everybody. CEO of APMEX, American Precious Metals Exchange, precious metals bullion dealer. This company was the first company that I interacted with when I first purchased my physical silver. I had it mailed to me in beautiful tubes. I mean, it was such a nostalgic experience for me. So it's such an honor for me to be speaking to Ken Lewis, the CEO right now, and how things have basically come full circle in a certain way. So Ken, thanks for coming on Crush the Street with me today.
No problem. We appreciate the time.
Well, I'd like to get your thoughts here on what's going on with gold. Obviously, we have a situation now where gold was doing very well up until about March. I mean, we hit a high in gold, and we're about $60 off of that high that we saw just, a month and a half ago, roughly. And it's just such a change, such a sea change that we're seeing right now. And I'm just curious, what is influencing the gold price? Why are we seeing this perpetual decline over the last month and a half?
It's a great question, and one that we're trying to wrestle with as well. I've been reading analyst reports for years now, and I feel very confident that metal prices were going to be on the upswing this year. I felt very confident this could be a great year for precious metals. I still think it's possible. We had a great first quarter, but when we looked at the resistance, the pullback on the price, I've been talking a little bit about what correlates, what drives the price of metal lately. And, depending on the analysts you talk to, they change their views on this about every year. They're looking for that correlation. But the strength of the dollar and the strength of the equities markets, I think, are really the big drivers right now as to why gold is seeing a little bit of resistance. Look at the stock market, look at where we're sitting at right now. I think the trade progressions with China and the optimism with that, I think the influence Trump's having on the Fed right now and in interest rates and what he's been able to do there, I think in general have not been very positive for precious metals. But like I'd like to tell everybody, I think, that can't sustain itself. I really don't believe that's the case. I think you're going to see an upturn. I think it's really gold's probably at a great entry point for those that are looking to want to take a position in metal because it's at levels that, frankly, as low as they've been in a good 6 months.
Yeah. Well, and in going into the end of 2018, we saw, stocks really start to get rattled as interest rates were rising, and gold having that inverse relationship to the equities prices and starting to act like gold, and the market doing what many of us think is inevitable, 10 years deep into the tooth of this, record long bull market here. So it does seem like it's inevitable, and it does seem like it's showing cracks. And, by what we're seeing right now, it's just being managed to another degree. And even Trump has talked about, the managing of the system with ultra low interest rates, loose monetary policy. So what are your thoughts on that?
Well, I thought it was interesting when already wanted to bring back quantitative easing, when the GDP is growing at over 3%. He wants to invest in infrastructure around the country to drive growth, artificially through the government. Look, I'm all for a healthy economy. It's good for us. It's good for all of us. It's nice to see your equities perform as well as they have. But I do feel it's starting to look a little bit unnatural. I don't think history shows that a president has been so actively engaged and so influential in some of the things he's doing. Again, I like to look at it right now and say it's pretty positive, but when's that bubble going to pop? It's really hard to say. It concerns me. It concerns me with the amount of artificial influence that seems to be out there right now. But at the same time, I'm also not a guy that's a conspiracy theorist. I'm not going to sit here and say, the world's coming to an end. But I do believe if people think about where we're at and where we've been historically, it does seem like there's some resistance coming in the future.
So this was major news a few years ago, and I think it ties into kind of where we are today and as it pertains to Trump. But APMEX leased the 50th floor of Trump's building in New York City. And it made news, he took a security deposit from APMEX of 3 gold bars, 32-ounce bars. I mean, he was on TV. He was talking about the weakness of the dollar. Hey, this is a problem. This is something that America should learn a little more about. And so, I mean, talk about Trump then and maybe where Trump is now and maybe the significance of that event, where, when all this took place.
A little story, and our former CEO, a guy named Michael Haynes, really sharp guy. We were looking to expand. We wanted a presence in New York City. We had to hire some executives back in 2012, and we had approached the Trump organization about some space, and we floated the idea, why not do a security deposit in gold? And the initial reaction was, I'm not so sure he's interested. We go, no, please talk to Trump, see if he'd be interested in that. We had heard through the grapevine he's a little bit of a gold bug, and so we wanted to see if maybe he would take part. And wouldn't you know it? Not only did he volunteer to do that, we actually did a press clipping. If you go out there and do a search, you'll see a picture of our founder, our CEO, and Trump holding the gold bars for the deposit. My personal belief is he was trying to make a statement about the economy and about the fact that he'd rather hold gold than the U.S. dollar at that point in time. And he was really, I think, preparing for himself to go run for president at the time. The funny story is we've vacated that premise. We're no longer in the Trump Tower. But when we left and we had to get the security deposit back, Trump actually asked to buy that gold at the end of the lease rather than us take the gold bars back. So I think it does show he is a believer in gold and he sees the merits of it. But frankly, he's done a really nice job with the economy. And, we've seen a lot of, I'll call it Republican types, people who are generally a bit more high net worth investors. A lot of them have migrated a little bit out of metals right now, but we know it's all cyclical and it's just a matter of time before they come back.
Yeah. So do you expect a certain catalyst? And by the way, to talk about Trump, I mean, he's got gold all over his buildings, his bedrooms, and all this stuff. I mean, I don't think it's a far stretch to think the guy likes gold, right? Yeah. But, having said that, is there any catalysts that you see going forward here? Is it cyclical? Is it something like a black swan event? The unsustainability of the debt?
Sure.
Interest rates rising. I mean, what is it that you are leaning towards as the probability or the inevitability of gold going higher?
I think probably the big one is the equities markets have to face some resistance. We've been talking about printing dollars and how potentially that's out of control. Our escalating debt, look, normally presidents come in, they have a good economy, we're doing really well. They've had to pay the debt down and get us a little bit more balanced. We're actually growing our debt every year, even with a great economy that we have right now. That's got to be concerning. And will the debt ever get downgraded? Probably not while the dollar's so strong, not why we're showing nice growth. I think people will feel comfortable about it. But the minute we start showing lower GDP, the minute the equities markets face some resistance, I think you're going to see some big challenges for our country because we have just an insurmountable amount of debt sitting on the books right now. And how are we going to be able to service that debt one day? So, it is a little concerning. I'd love to see us actually start to put some money back toward that debt and pay it down a little bit. But that just does not seem to be the psyche where we're at right now. So again, to sum up, I think the dollar having resistance, I think the equities market's facing some challenges. Those are going to be the key events. I think there's geopolitical things that could always pop, but it's relatively calm in those areas right now, if you ask me. I don't see anything big coming out of that. We were all wondering about the Mueller report and what might that show us. Honestly, it's been almost a no-go in terms of its impact on on our views of the presidency and really the country as a whole.
So since 2011, gold has been in what has felt like a bear market. You know, it just kind of constantly gone down. And every time we've even had a glimmer of hope, a dead cat bounce, it just kind of goes up and then comes back down. And we've been trained to feel that way. I know a lot of the subscribers are frustrated. People are frustrated with gold. And, you know, we've bottomed in December of 2015. And even though we bottomed there, we shot up to 1300 only for people to kind of get excited about it, for it to kind of disappoint again, right? In 2016, we saw that. We just saw it recently with it going over 1300. So people are just getting conditioned to just, you know, not trust gold in a certain way. And to an even greater degree, silver. So many people are feeling like silver has just lost its monetary component to an even greater degree than gold. So how would you respond to this sentiment that I think a lot of people are feeling right now?
You know, it's a tough one. I can feel for the people. And look, I worked at Microsoft for several years earlier in my career, and we delivered these great earnings and our stock price wouldn't move. And we were always like, what do we have to do? You know, we got a great growth every year and we're not getting rewarded. I feel like sometimes precious metals are in that rut as well. It seems like there's nothing good that can happen. You know, we do all of the right things. We have the dollar get weak, the equities market faces resistance. We get a little bit of a bounce, but nothing like what we used to get. And then we start to regress back again. So I can't predict why some of these things are going on. It feels like to a certain degree, metals are out of favor right now in the broader investing community. I think the VIX volatility index, there's a lot of things that just are pointing in a negative for metals right now. There are some positives, though. You know, I've looked at some analyst reports. We talk about supply and demand, right? We talk about industrial uses for product like silver. We talk about World Bank demands and how they're migrating away from the dollar and really starting to take a much broader position in gold. So I do think there's some supply and demand elements, some shifting, if you will, that will be good for precious metals over time. I think the other thing, too, is products like ETFs and others have been good for gold because it's brought in a broader mass who are now intrigued by its possibilities. We're going to have to see some sustainability in the price. We're going to have to see it start to increase and do that over a consistent period of time before we really start to get some wind behind our sails. I thought that was happening. I really did. I was very surprised to see what's happened here in April, to be honest.
And so what are your general thoughts on silver? Is it the quote unquote poor man's gold? What's your sentiment on it? Is it the leverage exposure to the gold play? You know, is it industrial to you? Where is it in your portfolio?
You know, personally, I'm actually more weighted to silver right now. I took a broader silver position when it went below $15 recently. I feel like silver has more upside to it in the long term. When you look at where it's priced and where it should be priced over the long term, you know, obviously there's a more readily available supply of silver, but there's a significant industrial use for that product as well. If you look at where it's traded historically, my general view is silver has more upside to it than gold right now. But we're going to have to see. You know, trading in the 14s, you know, silver should probably be. I read an analyst report recently that said 16.50, $16. If you think about it, at 16.50, that's a pretty nice return on your investment if you want to be in silver. One of the challenges with silver on the investment side is it takes up so much space. You know, to have a large position in silver is kind of challenging to do if you want to buy physical. And it's why we've actually launched a digital product where people like an ETF can own metal, own it at a very low cost, and be able to not have to store it in their home. So I think there's going to be products like that are going to make silver, I believe, available to the masses and more acceptable to people from an investment standpoint long term.
So let's talk about the One Gold joint venture. I mean, tell people about what this is. I mean, obviously it's intriguing because of all that's gone on, you know, with digital currencies, the blockchain, and, you know, what is One Gold? You know, is it like that? And what is the benefit for consumers?
Yeah, look, I always felt that precious metals can be a little complicated for consumers. I had a buddy of mine, I tell the story, he's a Mensa guy, very, very bright guy. He's like, what do I buy? Why do I buy that? How do I get, what's the process? And it was frankly pretty complicated for him. And what I believe cryptos or the technology behind cryptos has done is it's making certain things more available to the masses. It's making it easier to be able to take a position in metal. And so we got together with a company called Tradewin up in New York. They're backed by IEX. They were a blockchain technology firm. We talked with Sprott. Sprott and us jointly invested into this entity. We partnered with the Royal Canadian Mint up in Canada. And what we basically have done is we take a position in metal, we write it to the blockchain, we then sell ownership in that position to consumers. We update the blockchain to reflect that ownership at all time. It's a permissions-based blockchain. It's not open source, so it's much more secure for consumers. And really what we did is we made it easy on your phone where you can link a bank account, you can buy $5 a day, $5 a week in silver, you can do it or gold, and you can do it knowing that the metal's always there 100% of the time. And you got a firm like Atmex and Sprott, the Royal Canadian Mint, standing behind it. So you're not going to worry about like cryptos are where, you're not sure what the intrinsic value is. You're not sure if it's going to be there long term. We've kind of calmed down that concern. And you can own silver right now. I believe it's 4 cents over spot. So if you want to own silver, you could do it digitally and own it for 4 cents over spot. You can still own it physically, and some people who don't trust the system want to own it physically. That's going to cost you 50 cents to $1 over spot. Or you can go buy an ETF and pay the fees that they want to charge each and every year on that. So we think it's a viable option for people.
Well, and you mentioned something there. A lot of people don't trust the system. They don't trust the ETF system. They don't believe that it's really backed by silver. And there's a lot of evidence to question that, if we really wanted to go down that rabbit hole here. And this is a very interesting option. I've heard of this, the trade wins and what they're doing and the opportunities to own physical silver, digitally, and have the confidence to do so. And especially, much of the audience who understand cryptocurrency, how immutable, how clear this new technology is and the new use cases for it. It's a perfect blend for precious metals investors. And, I think some people just need to kind of come around and understand the technology to trust it a little more. But I mean, what a way to do it. 4 cents over spot, you can own, silver. That's a pretty amazing thing. So
one of the
Ken, if you would just share some closing thoughts here, if you want to respond to that, and, maybe we'll just share some closing thoughts.
Well, first things I want to wrap up on the one gold. Your point is we wanted the metal always be there. People have confidence. We've done that. We want it to be affordable. We want it to be easy to use with technology. And then more importantly, we also want you to be able to take a physical position if you want one. So if you want to go in and trade your digital for physical, you can do it with a couple clicks of the button and precious metals will be shipped to your door. So it's really meant to offer all the confidence that an ETF lacks with the convenience that digital can do that physical doesn't offer. So just keep that in mind. And the last thing I'll say on one goal, I'll shut up on my song and dance on it. We've actually given customers $5 free metal to try the platform. So if you create an account on One Gold, you automatically get $5 in metal, and you can go and trade it at your leisure and just see how easy it is to use the platform. We're confident. We're putting $5 behind to prove it. We're confident people are going to find it's just super simple to use. And our hope is we bring more people to precious metals with this product than we would be able to do just selling physical. That's our goal. But hey, thanks for the time. I hope the markets turn for precious metals. I do believe it's still going to be a good year. I think it's only a matter of time before the equities markets are going to face resistance. We can only print dollars for so long. Eventually, we're going to have to pay that debt down. So, if you're looking to take a position, the last thing I'd say on taking a position in metals is look at your portfolio diversification. Think about how your portfolio is positioned, how you deal with risk. Precious metals perform great when the equities markets tend to suffer.
Well, Ken, I really appreciate you coming on this show. And I know sometimes it's difficult to have these discussions when, we have the price of gold going down in our face here. But arithmetically, nominally, now is the time to be looking at it, as opposed to, when a video like this is going viral, gold's at $5,000 an ounce.
Right.
And, people want to get in then when they could have gone in at 1270, right? So now is the time, in my opinion, to be more prudent, even if it doesn't feel as good as, catching that rising tide at much higher prices. So again, Ken, thanks so much for coming on Crush the Street. We'll have the links in the description area. Visit AppMex, great company. I mean, been around for years. I mean, the first company that I interacted with. So lots of love, lots of love. So Ken, thanks for coming on Crush the Street.
Thanks, buddy.